All right, good morning, everybody, or afternoon. We'll start talk today about why GME is going up. All right, GME and AMC a little bit, just very slightly. They're going up because of a short squeeze. That's why I mentioned AMC. All right, so what happened? We'll get right to it. All right, shorts. I talked about this in the previous video, so hopefully you watched it. If you haven't, go back and watch and learn about I think it's the introduction video, or I talked about shorts. It's a little more of a breakdown right here. All right. So when you short a position, it's the opposite of going long. Borrow shares from the broker to sell to the market. All right. The market being other investors. You don't sell it to just the market's not a thing. It's a bunch of people. You buy the shares back from the market and return it to the broker. All right. You keep the profit if there was a decline in the price. So if it dipped, you keep the profit. If price went up, you lose money and you buy it back. Whenever you buy it back, no matter if you lose or make money, it's called covering. All right. All right. So you have something else called naked shorts before we talk about short squeeze. Naked shorts is whenever the broker lends you shares that they don't actually have. So if I wanted to borrow 100 shares from my broker, okay, and my broker may have, of course, he has other clients, and the clients cumulatively may own 1,000 shares. All right. That means the individual traders who have accounts with that broker have 1,000 shares. All right. He may say, yeah, I got 1,000 shares here. So you can borrow 100. All right. Well, if I wanted to borrow 1,500, right, by he, I mean the broker, can't allow me to borrow 1,500 because he doesn't have 1,500. But brokers will do this sometimes. It's called naked shorting. It's actually illegal. And so that's what's going on right now. If you look at the percentage of borrowed shares of GME, I didn't look at it today, but I looked at it the other day. It was 150%. I think 150%. It can't be over 100. You can't borrow more than 150% of a thing. You can't borrow more than 100% of a thing, right? So that was one reason why it went up. And then AMC the same thing. It was at 30%. 30%, even 30% is a high level. And that's what happened today. You had a short squeeze. All right. So this is what happens in the short squeeze. It occurs when the rise in the price causes short sellers to cover their position again. If you're selling to the market, right, you're hoping the price goes down, but the price goes up, you're only willing to lose so much money. And being that the price can go up to an infinite amount of money, you can lose an infinite amount of dollars, right? So eventually you're going to cover yourself, all right? So it causes short sellers to cover their positions to prevent or reduce losses. All right. They can also cover to make money too, but this is the short squeeze. All right, the buying back of the stock combined with the initial buying. All right, so you already have people buying the stock, which is causing the stock to go up. All right, so combine that with the people who are shorting it, it gets past the level where they're willing to lose money. So then they're buying the stock too. All right, more buying makes the price go up even more. When the price goes up even more, you have more short people covering. All right, you may have had retail traders, which is traders like you, me, Joe Schmo over there. All right, you may have retail traders who were shorting at first, and then you have institutional traders or people who are hedge fund managers. These people might also be shorting a stock. They have a lot more capital. They may have millions, maybe billions of dollars to work with. Whereas I'm not willing to lose a few million. I can't lose a few million. I don't have a million to lose. Right? I don't have 100,000 to lose. All right. These people have a lot of money to lose. So it snowballs though. It's the retail traders first, the higher earned or people with more capital retail traders, and then starts hitting institutions. All right, so it works like this: retail traders get hit, they got to cover their positions. Prices keep going up. All right, this attracts more people to buying. It attracts more people to going long side. All right, if that happens enough, these institutions have to buy. All right, this means much bigger buying. It's a difference between me buying back 100 shares or 1,000 shares or 10,000 shares and the institution buying back to cover their losses, buying back something like 100,000 shares, 200,000 shares. Now, it may not come across on the level 2 like that. It may be hidden, um, but they're going to have to cover their positions. And this is what's going on. You're having institutions who have shorted this stock and they're covering their loss. You have hedge fund managers. There's one, I can't remember his name right now, who's in the news, who actually had to get bailed out by another company because he lost money. And so you had a little bit of not a little bit, you have a lot of a short squeeze. So these are the contributing factors, and I'm going to go show you what the short squeeze looked like in the market. You had the short squeeze, which was the biggest one. You had Ryan Cohen, who was the former CEO and co-founder of or I don't know if he was the CEO. I know he was co-founder of Chewy. sold Chewy to PetSmart, took a $75 million position in GameStop, and then took over some management, tried to redo some things, is redoing some things, and that was last year. It took a 75 million share position. It should be up a few $1 billion by now. Because I think back then it was like $2. All right, so he came on board. That's causing some of the move. The Reddit and Wall Street bets. It's a Reddit thread. It's a group of people who are actually Wall Street bets is banned now for market manipulation. I don't think they were really manipulating the market. I mean, we make up the market, but I'm not gonna get into that. So what happened was you had all these individuals who were coming in and saying, "Yeah, we're making all this money on GameStop," and they were kind of it was almost like a pump and dump, but it wasn't a pump and dump because if you've seen Wolf on Wall Street, that was a pump and dump. These people actually had positions in these stocks, investments. They're pumping it up, saying it's gonna be the next big thing. They're cheerleading it on, and then as soon as the price gets up, they yank out their entire position. All right, after the price goes up, they take their profits. They leave the investors there dangling, losing all their money. All right, this wasn't a pump and dump. This is just a pump. It's a whole bunch of people influencing a whole bunch of people, and after a while, it becomes the only thing. Like I didn't know about GameStop because I read about it in the news. I knew about GameStop because it kept coming up on my scanner, and then it kept moving and moving and moving and moving. So I got to figure out why is this thing moving. All right, so not only is the movement in the market of GameStop attracting traders, the movement in GameStop is making news and social media news especially, and it's attracting people who don't normally trade or who wouldn't normally buy GameStop to get into GameStop, right? And you got Elon Musk yesterday. He sent out a tweet after hours after market close, or near market close and he just said GameStop, and that alone sent it up from like 150 to 177, something crazy like that. So all these factors combined, and you have a shooting star. You have people. I mean, if you bought it on Thursday and held, I mean, I don't know why you would have held. There's no way of knowing that it would have gone from Thursday at about 30 some dollars a share to $300 a share. That's $100,000 in 4 days. Nobody. I mean, I don't. What job do you have that makes that? None of that now. So we'll look at the charts and talk about what these short squeezes look like real quick. Look, there's me and more me. All right. GME. Get GME up. All right. Let's detach it. Let's look at it. All right. So this is where it's trading today. You see it's actually fluctuating. It's at 315. It got all the way up to 378. All right. This is a daily chart, and the blue is overlapped. It's just actually here. I'll change it and make it a little bit easier on the eyes for everybody. Let's do this. Make that, and let's not overlap the volume. All right, volume's down here now. All right, these are prices. All right, so as you can see, like for the most part, all last year is just hovering around dollars, $5. All right, and then it started increasing a little bit, Really started making moves around here. All right, but you see the date down here. The date's at the bottom. It's 12/3. It's $20. All right, that's a pretty good move from down here around 571. That's a good move. All right. But the last few days, look at this. From $22 all the way up to 378. And this is what's been happening. So you had people who were coming in. All right. If you read my Facebook post, I posted that on January 1st, right here, or 4th, the first trading day of the month. It only got to $19.90. All right. So it doubled right here on this day. Got a 40.83 on 13th. All right. So if you're short or you're bear bias, you come in, you short. All right. This stock can continue. It doubled in one day. Let me come in, short it. All right. Next day, if you're a retail trader, maybe you got back out. It went up a little bit more to $43, but maybe you stayed in. All right. You were good. It went down. You had a red candle. It went down. You were fine. All right. It opened higher. All right. And the price pushed up. And so maybe you came in and double your position and said, all right, this is the highest it can go, 45. All right. And so you have institutions, retail traders shorting this stock right here. All right. And for right now, they're fine because this is consolidating. Oh, on the daily chart, this is consolidation because and technically it's almost like a bear flag because you have this big move up on high volume, green candle, another green candle, And then you have consolidation in red. All right. And none of the volume on this red was any higher than this green. All right. Still consolidation. Still consolidation. And you're fine here. If you were bullish, you may have still been right. Even though it got up to $45 on this day, you may have still been right. All right. But to this day, you got squeezed out. And that's why the move was so big. All right. So you got squeezed out because on this day, it was $46 when it was about $43 or $42 when it opened, and it got way up here. All right, so you got people getting squeezed out, people getting squeezed out, people getting squeezed out, people getting squeezed out. All right, it almost doubles. It goes to $76, but it almost doubles again in one day. All right, so that was that day. That was Friday. That's the day I traded it. Monday, it opens even higher. So people who shorted over the weekend thinking, oh, okay. So yeah, more people probably shorting right here, thinking this is as high as it can go, especially if it got all the way up here, but it pushed back down. You have probably more people shorting on top of this. All right, it opens higher. It opens at the top of where it got on Friday, on Monday. People getting squeezed out again, squeezed out again, squeezed out, squeezed out, squeezed out, squeezed out, squeezed out, all the way up to 159 on Monday. On Friday, you were at $77. You made double your money. All right, or you lost double your money. All right, so again, same thing. People could have got right here, maybe up in this range, shorted it. Said, no, I can't. It can't. All right, and they get squeezed out again. Right, last because today's actively trading right now, and that's actually a nice bullish candle for a daily candle, except for it's not green. Today, I mean, ridiculous because this is today. You had that day yesterday. You had the Elon Musk tweet. We sent it from 147 to actually the 177. Today it opened. It opened around three something, $300, but it got all the way up pre-market 340, and it got today until 379. Ridiculous, ridiculous. And what happened is you got people getting squeezed out. And again, the reason why it gaps up so high is because you have institutions getting out. All right, institutions are going to create a lot more buying, like I said before, than you and I. All right, if you and I and a bunch of other retail traders got together and we decided to dump our covered positions, it may go up a few dollars. It's not going to go up between the open and a tweet from Elon Musk helped. It's not going to go up $149 from 149 on the end of the day. And the next day open at $300. It's not going to do that. It's going to do that when you have these large institutions, these hedge funds, who have to liquidate their position to cover themselves and all the loss that they made. Right now it's trading at 330. We'll see if it gets to 400. I'm thinking it fizzles by the end of the week. I mean, but I don't know. I would have never thought it got here. If I ever thought it would got here, I would have held on freaking Thursday and been $100,000 richer. But I'm not, so it's fine. Again, hope this video was helpful. I'll be doing another video probably on Friday about something. I can't remember. I'll do another video on Friday, and then I'll of course be live on Sunday. And then in the future, I'm going to do a little small account challenge to show you guys how you can make a living off of a small investment of money. And then I'll do live while I'm trading, so you can see what it looks like when I'm trading. I'll be pretty aggressive since it's small size, and of course I got a family to feed, so I'll be living off the income I make off of that small account. And if I do any trading with my other account, then I'll let you guys know. But hope you enjoyed the video. Again, thanks for liking and subscribing or doing whatever it is that you do. Hope to see you again.